Hey everybody, it's me, Gregory Mannarino. How are you today? It is Friday, January 19th, 2018. People, two things are going on right now that are very important, and unless you live under a rock, you probably have no idea what I'm talking about. Well, let's start off with this. This sell-off in the bond market is continuing. As I am doing this video blog, the U.S. 10-year yield is 2.64. The U.S. dollar just hit a 3-year low. So we got bonds selling off. We got the dollar under pressure. Stocks today opened higher, but as I am doing this, are just about at the flat line. Look, as far as I'm concerned, you see this? This is going to remain open. I'm not doing anything right now. I'm not buying anything. I'm not selling anything. I'm just going to sit back and watch this unfold. Seriously, keep your eye on that bond market. And look, I'm not the only guy out here yelling from rooftops about this. We just crossed Jeffrey Gundlach's red line with regard to the bond market. That was the 10-year yield hitting, going above 2.63. I mean, it's hard to argue against this guy, multi-billionaire hedge fund manager. The guy's brilliant, in my view. It's other guys too. Bill Gross, former Fed chairperson Alan Greenspan. A lot of people out here warning about the issues in the debt market. Now, we understand, and we've been seeing this for months now, that whenever the bonds here hit a critical level, like we are now, almost like the cavalry rushes in and starts buying up those bonds. Well, we're not seeing that yet. Again, bonds are under pressure. The dollar is at a 3-year low here. Gold and silver are higher. So we really need to follow this. I can't stress this enough. Now, what I'm going to suggest, again, is this. Now, if you have an investment here in a 401k plan and you're all happy about your paper gains, well, you better make sure that you're watching that bond market, because I can promise you that if we start getting a rapid sell-off in bonds, yield spike, pressure is going to build on that stock market, which is in a bubble, built on the back of the debt bubble, and you will watch those paper gains evaporate if you're on the wrong side of that. So you, especially, better keep your eye on that bond market. Pay attention to the yield curve. Again, the spread between the 10-year and the 30 is less. It's actually 27 basis points. We're going to get a flat yield curve. It's probably more than likely going to invert. The Fed can't raise rates fast enough to prevent this from happening. If they were to do that, that will put pressure on the stock market. They do not want this to happen. President Trump does not want this to happen. President Trump is probably very happy about the weaker dollar, because again, the dollar falling like this, you getting poorer every single day that dollar loses purchasing power, is stock market positive. So anyway, you better have your eyes open here, people. And who knows what's going to happen later today? The cavalry might come rushing in, start buying up those bonds, propping it up. But I'm not doing a damn thing with my cash until I see some stabilization occur in that bond market, one way or the other. If bonds start to sell off more rapidly, I'm going to short the market. I will post it on my social networks in real time, just as I've been doing with all of my stock picks over the past several months, and we have been killing it, frankly, killing it, making, frankly, stupid amounts of profit in this market. I mean, it's just the truth. So let Washington get their act together. Let's see what happens here with the bond market. Let the bond market tell us what we need to do with regard to this market. And again, I'm looking to help you out. If you have an investment plan that is based on stocks only going higher. Think of how insane that is. How ridiculous is that? Who came up with that premise? I mean, it's the most insane thing. You know, traders like myself, we don't care where the market goes. We're going to make money. If you're stuck in an investment product that only makes money when the market goes in one direction, well, think of how vulnerable that leaves you in the event of a market correction or meltdown. All right, look, I'm going to shut my mouth here. I think you have an idea of what to look at because I've been beating it like a dead horse here. So go to my website, traderschoice.net, right side of the page, under the chat room, watch that bond market today. If you see that start to sell off even further, if that 10-year yield continues to climb, going deeper into the red with regard to Jeffrey Gundlach, well then I think we as traders know what to do, and you as investors better get your acts together and quickly. All right, with that said, I'll see you all at the end of the day. We'll put this together. It's going to be interesting. Over and out.